Hello and welcome to Gradient's weekly roundup of key business and financial developments in Sri Lanka for the week ending 3rd June 2022. I'm roshaanr and here are the top stories for this week. Tax amendments roll in as government attempts to shore up coffers. Fitch warns further instability could result in further negative ratings. 700 billion rupees supplementary estimate for essential services. Central Bank assures forex availability for essential imports. We will also briefly look at other notable news that made it across to our news desk and wrap up with the capital markets update. In our main story this week, on Tuesday, the government issued an extraordinary gazette implementing new taxes and reintroducing previously eliminated tax measures in an attempt to recoup much-needed revenue. Accordingly, with immediate effect, the value-added tax rate is increased to 12%, with the threshold reducing to 120 million rupees per year from the 300 million from 1st October 2022. VAT exemption on condominium residential apartments as well as the supply of services registered with the SLTDA are removed. Further, the telecommunication levy is increased to 15% from 11.25%. On direct taxes, the annual tax-free employment income is reduced to 1.8 million rupees per annum, while the standard rate of corporate income tax is increased to 30%. Withholding tax on investment income is reintroduced across interest, dividends, rent and professional fees. The government aims to generate about 300 billion rupees next year by these measures. The significant tax cuts introduced in November 2019 resulted in annual revenue losses amounting to over 600 billion rupees. Fitch Ratings stated that it is keenly observing developments in Sri Lanka's political landscape where further instability could trigger further negative rating action. This follows last week's downgrade of Sri Lanka by Fitch to restrictive default on non-settling of coupon payments on 2 international sovereign bonds. According to Sagarika Chandra, Director of Asia Pacific Sovereigns, Sri Lanka's domestic and social political climate, progress achieved with the IMF and debt restructuring are the 3 factors being looked into at tandem. Cabinet approval was given to Prime Minister Ranil Wickremesinghe's supplementary estimate for the provision of 695 billion rupees under the Budget Assistance Services and Emergency Responsibilities Project. Funds are to be utilized to provide uninterrupted essential services. The Central Bank of Sri Lanka assured that restrictions imposed on open account payment terms will not lead to a large-scale shortage of essential food items. The institution stated that it undertakes to ensure availability of foreign exchange through the banking system for the importation of essential items. Effective from the 20th of May, the Ministry of Finance restricted imports to be paid through the open account payment terms or consignment account terms to recreate dollar liquidity in the formal banking channels. Open accounts are deemed to create a grey market where foreign exchange inflows and outflows take place outside the banking channels, depriving it of foreign currency liquidity. In other news, inflation in May, as measured by the Colombo Consumer Price Index, recorded its highest level of 39.1% year-on-year, significantly up from 29.8% a month earlier. Food inflation increased a staggering 57.4%, whilst prices of the non-food group grew 30.6%. Free floating of the rupee, supply-side issues, and increasing global prices have continued to result in all-time price highs. On Monday, Power and Energy Minister Kanchana Wijesekara stated that $554 million is required to import fuel in June. He added that of the requirement, 100 million will be facilitated through the existing Indian credit line and that negotiations are currently underway to secure a new credit facility from India worth about $500 million. The minister further noted that 12 fuel shipments are expected to arrive in the country next month, containing diesel shipments, 92-octane petrol, fuel oil, jet oil and crude oil. According to Cabinet spokesperson Minister Bandula Gunawardena, the base year for gross domestic product calculations is to be changed from 2010 to 2015. The Department of Census and Statistics had revised quarterly and annual GDP estimates based on the newer base year, and the GDP in the first quarter of 2022 is to be estimated on 2015 base year. And now let's take a look at the weekly movement of the All Share Price Index and the S&P SL 20 Index at the Colombo Stock Exchange. At the weekly Treasury bill auction held on Wednesday, yields eased on all term maturities. The 91-day tenor declined the most, falling 90 basis points from a week earlier. 244 billion rupees worth of bids were received, of which 83 billion rupees of bills were accepted. And here's how the rupee performed against the dollar this week. In other market news, Hella Apparel Holdings announced that its IPO funds will be used to strengthen its balance sheet whilst remaining committed to the objectives listed in the IPO prospectus. Morrison commenced commercial production at its 4 billion rupee modern pharmaceutical manufacturing facility in Pitipana, Homagama. CL Synergy withdrew its 1.28 billion IPO, citing prevalent unfavorable economic, political, social and financial situation in the country. And that's a wrap for this week. Follow us on LinkedIn and YouTube for more updates on business and financial developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.